Welcome back to the Future Leaders podcast, where we help you build $1 million skill set, gaining insights from successful CEOs. Today we've got a super special guest for here today who has over 2 decades of experience, helped over 2,000 people build generational wealth, and is the founder of one of Australia's largest investment firms. Thanks so much for coming on, Michael.
It's great to be here with you boys. The energy and the enthusiasm, and when I say boys, I mean that facetiously, but the energy from you 20-something-year-olds, I love it, and let's talk. I'm ready to go.
Awesome, let's kick into it. So the first question, didn't want to make it too boring. So overall, you've been featured numerously on platforms like ABC, realestate.com, the Financial Review.
Yep.
Now, what makes you different to other property investment firms?
Look, I think ultimately we like to be authentic. We like to be who we really are, which unfortunately in life and on Instagram, for example, a lot of people aren't who they really are. And I think that's something we've held from the very beginning, is that we're open, we're honest with our clients. I know that sounds like a cliche in property, but unfortunately a lot of people in the property game aren't that. And it's pretty easy for smart people to read through that and know who's not being authentic and who's being real. I think from the beginning, Propel Property has always tried, and we continue to be, an authentic agency that genuinely cares for our clients. You put your clients first. By nature, the universe rewards you for a fair exchange. We get paid fairly. We get paid for the value that we provide. I think everyone in life, you get paid according to the value that you provide to the universe. We provide that value for our client. We know that they're going to win, they're going to succeed, achieve their goals, and by nature, they'll tell their people, their tribe, their friends, their family to come to Propel, and that's how the business has grown over, as I say, almost the last 9 years.
Yeah, awesome. So it's like the authenticity, the genuine connection
Yeah.
you're able to build with your clients, opposed to, you'd say, some of your competitors may not actually provide that.
A lot of them, and I hate sort of being in that real estate agent class, because you look at the trusted list, we're like down the bottom with car salesmen, but we're trying to be different, and we are different, and I think that's shining through, where a lot of property groups, you can just smell that commission breath on them. Or they're not thinking about your situation and how like the best outcome for you. They're actually thinking about how they can make a sale. And smart people can read that, and smart people get turned off that. I'll give you an analogy. You're at the bar, and the sleazy guy or girl's just trying to get onto you. You're naturally repelled away from that.
Yeah.
Whether they might even be good looking or not. Say a hot chick comes up, but she's all over you and it's kind of gross. You'll walk away, right? It's the same thing with business. If you can smell people are hungry just to feather their own nest, you'll walk away. So we want to be different at Propel. We do put the client first, and we know by nature that the universe will reward us with a fair exchange, and it does, and we're thankful. We've got to run a business, we've still got to eat as well, but if we provide value to our client, then we know that we've got a really strong business model moving forward.
And how do you think you do that? Like, is that working like really closely with the client, keeping them informed throughout the process? Is there anything that you specifically do to make sure you can build that relationship with them?
I think first up, when you meet a client, it's about having 2 of these and 1 of those and using them in proportion. I learned that early on. You know, some people, all they want to do, they're thinking about what they're going to say next. They're not actually listening to what the client situation is. I liken it to a lot of property groups are like the doctor having your prescription already done before you've actually gone to the doctor to tell them what's wrong with you. So we don't have anything for sale. We listen to our clients. We listen to their story. We listen to their pain points. What's their mystery? What's their void? What are they missing right now? Where are they at? How could we help? For us, it's like, we're not necessarily all things to all people. We sometimes turn people away and we say, hey, John, hey, Mary, we don't think we're the right fit. We don't think we can help you. And that's okay. And it's quite empowering to be upfront and honest. Most businesses are like, oh, just get whatever business you can, just get anything in the door, make a deal, get a commission, get a sale. And I think for us, going the other way actually has worked the other way for us too. We've gotten busier and busier because people are smarter these days. I started 20 years ago, boys, and there was maybe just the internet, obviously, but there just wasn't the amount of information available that there is online today. You do the wrong thing today in the market, you're going to get found out pretty quickly. So, we've got our own little niche. We do things differently, and that's the way we like it.
So you briefly mentioned that you sometimes turn people away. I'm just curious.
Yeah.
What are some of those reasons that you may want to? Is it more for maybe they may not be in the best position to do so, and you think it may not be in their best interest, or what would be some of those reasons?
Good question. If they want to do something and they've got the right mindset and they're not quite there financially, we can and we will work with them to get them into a position. And sometimes we've worked with clients over a 2, 3, even almost a 4-year period to get them into a position to purchase. I'll go back to that point, mindset. If a client hasn't got the right mindset and they come to us asking for advice on one hand, but then telling us what the right answer is on the other, it's a bit like going to the dentist to tell him what to do with your teeth. I know I don't do that. I don't know if you guys do. But when you go to the dentist, you lie in the chair and you say, thank you, Mr. and Mrs. Dentist. Thanks for helping me. You do whatever you think's right for my teeth because you're the expert in that field. Yeah. So for us, if the clients don't have the right mindset, and it's rare, it's probably 1 in 30, 1 in 40, but if they don't have the right mindset, we politely let them know that maybe they're best off going to try and do it themselves. We research and we study the property markets all day, every day. Respectfully, we know what we're doing. If a client's going to come and pay us for our services, but then on the other hand, tell us what to do, it's probably not going to work.
Yeah, awesome.
That makes sense.
Yeah. Oh, yeah.
Yeah. So
you'll have a think about that next time you're in the dentist chair. Just let them do what they do. They're normally pretty good at it if they're a good dentist.
So overall, I have to know how expensive and overwhelming the property market is.
Yeah.
How have you helped over 2,000 people buy properties?
Well, if you look at it, it's about 100 people a year for 20 years, or it's on average about 50 couples. Some people are singles, most are couples. So it's not that many. It's enough. But in my role, helping people with various building companies over the years, various real estate agent firms, it adds up over time. And I think now here at Propel, we're helping, well over 100, almost 200 clients a year. So it adds up over time. We're proud of that. I'm proud to be able to say that with every transaction that we do, we try and help the client as best we possibly can. And I get it that we're in property and property has to go through for us to earn a commission or fee, if you want to call it that. But ultimately, there's so many different types of properties that people can buy. And so you might come with a $700K budget and a property group puts you into a shitty apartment. Hope I can swear on here.
Yeah, no.
Whereas if you came to the right property group, they'd probably put you into something with some land content and a house in the right location. Those two assets are going to perform extremely different over that next 20 years. Yeah. It can actually be the difference between you making money and getting wealthy and not. For want of a better analogy, you're buying the dud car or the good car. A car's not a good analogy because they both depreciate. But so many property groups, unfortunately, in our space, put people into the wrong properties. And property is not just property. An apartment in the wrong area or a townhouse in the wrong area is going to do so different to a property with land content in the right area. Do you think could be the difference of a doubling in value in 10 years and one just going up 100 or 200 grand. It could be the difference between you being $600,000 or $700,000 or $800,000 in front or $1 million in front or not.
Do you think that's a selfish play from other firms by putting the clients, they've got a big budget, but putting them in something smaller? Are the firms making more money by putting them in something less?
It's a good question. We always say here at Propel, if you've got $1 million budget, we're not going to put you into two $500,000 properties like these other firms would. Yeah. Exactly right. They earn a fee twice. Whose best interest are they looking out for? They're looking out for their own because they get paid twice. But ultimately, I don't actually think they are looking out for their own because these clients buy them, they don't get the growth and then they can't buy again. Yeah. Our modus operandi is if a client's got a $1 million budget, we'd rather them get one more premium property in a more premium area, more blue chip area, better asset, better tenants, more capital growth. And then by nature, a year or two later, they've got the equity from that one to be able to go again versus buying two duds that aren't going to grow in value very quickly, if at all.
Play the long game, not the short game.
Play the long game, because clients come back. We've got clients. We had the other day. Where are we at now? Like October. We're the last quarter of 2024. Had a client email us from 2016. We helped them into two back then. They went really well off those two. They sold them, paid off their own home, and now they're back again in 2024 to buy another two. So if we hadn't done the right thing back in 2016, they're not coming back. But be long-sighted, not short-sighted with everything, I think. I think this is also, for your entrepreneur audience. In everything that you do, have that long game approach. You're starting a new business. It's not going to happen overnight. You're starting a new business. You've got to think the long game. You've got to create the content. You got to post and post and post, and you boys would know that. Like I pretty much posted almost every day for nearly 9 years.
Yep.
It's only really the last 2 to 3 years we've got to some real traction and breakthrough. Whereas I was like for 5 or 6 years, I remember going, my God, like am I talking to nobody here on the stories? Oh, like there's 10 people have seen it, yippity doo-dah. But now we're really blessed. We've got 5,500 organic followers on Instagram. We've never bought followers. We've never entertained any of that. That's all organic, but that's literally after years and years of posting. So I digress there, but I relate it to your own business game. Your own business game and the property game is a long-term game, but gee, it can be rewarding if you follow the right steps and you listen to the right people.
It's all about building relationships with people.
So important.
I'd also like to know, what's the biggest or the most expensive property you've helped someone buy?
The most expensive property would be around about 3 million. But yeah, we're ultimately helping investors. So it was a development site for 3 million.
Nice.
Most of the properties we help people buy land between sort of 700K and say 1.5 million. But then at the lower end, obviously when I first started, there were $200,000 properties, but that's 20 years ago. So yeah, a full range, but with investors, it's a situation where we wouldn't really be going 3, 4, 5 million on one investment property. We would say, hey, let's diversify. Let's get a 1 million, 1 million, 1 million. Development site's a little bit different, where you're buying a bigger site and chopping it up into, different lots.
Is it also just houses you buy? Do you buy property for businesses and
commercial you talk about? Yeah,
commercial.
no, good question. We stick to residential. Commercial's a different play. It's a different set of parameters. Higher rental yield generally. You need more deposit from the bank to go in, but that's very specialised as well.
The high rises classified as commercial.
A high rise is still residential.
Yeah.
But we stick to residential. I like the saying, boys, he who chases 2 rabbits catches none. We know what we're good at. We're good at the residential property side. We're good at the single dwelling, duplex development, triplex development side in residential. Residential is safer. A lot of the commercial guys might be looking at this going, oh, no, commercial. I get it. There's definitely a story for commercial, but commercial's a different play. It's more of a yield play, more of a cash flow play, whereas I'm not saying you don't get capital growth from commercial, you definitely can, but residential is safer. You can go in off a lower deposit. The banks like it better. So for people starting out and for people building portfolios, they can come in off a 10% deposit generally with an investment property. So 700K, 70K plus costs, call it 90 or 100. With a commercial property, you would generally need a 20 or 30 or 40% deposit. So it's a higher barrier to entry.
Yeah, what would you say your superpower is that makes you different to everyone else?
Well, it's probably the connection with the client and understanding their need, and then applying that to the right property for them.
Yeah.
Finding the right property is crucial, obviously, at the right time of the market. Hence why, having just, I suppose, relied on me being an old boy with the street smarts, I've backed that up with Archie Spargo and our wonderful research team in here, that he finished top of his year at Griffith Uni. He's in his 20s like you. He's 21 or 22. But he's bringing that book smarts too. So we've got the street smarts plus the book smarts, I think, is the ultimate what you need with property investment.
Yeah. And what would you say your superpower as Michael?
Empathy, maybe connection with others. Maybe it is. Everyone laughs in the office that I don't use my laptop that much, but I can do it off my phone. I'm pretty analog. Maybe bringing people together, connection, and getting everyone on the same page, and I suppose getting them excited and getting them fired up. Maybe my superpower.
Galvanizing.
Yeah. I think I'm pretty inclusive. I think I'm generous in the right way. I think that's come from my football background, always being a part of a footy team, and always got to care for your teammates. I think football and team sports gives people a really good grounding for business. You're not just worried about yourself. You've got to be worried about everybody. How's everybody going? From the person who's getting paid the least to the person who's getting paid the most, and everyone in between. They all should be treated the same way, and they definitely are here at Propel. And I think probably that translates to culture. Why do people like working at Propel? I know Q, our head of acquisitions and general manager, put in there the culture. He likes the culture the most, amongst other things. He loves coming to work. gee, it gives me goosebumps to know that our team loves coming to work. A lot of people go, oh God, I got work.
Yeah.
We actually love coming to work. We walk in, go, thank God it's Monday, or we have a fun Friday every now and again. So yeah, culture, I think I'm in the right spot for where I am. Growing up, I probably wouldn't have put down, I want to be a managing director or a CEO. I would have been happy potentially working for another firm, but I kind of got done over a few times by those people. So I was like, I may as well just do this myself. So yeah, team mentality, thinking of others is probably my strength.
I would agree with that strongly. I walked in here with our videographer Kyle, who does the whole setup for us, and the first thing we said is, "Holy shit! Look at this environment." A CEO that's walking around, hopping on the phone, helping his employees out, having a laugh. I'm like, can we just quit our jobs now and come work? I think I want to get in the property space, but
thank you, mate.
As soon as I felt it, we were welcomed with open arms, and you don't see that. A lot of, I find, CEOs can necessarily be a bit standoffish with the younger generation. But
Good leadership, yeah.
No,
That's
great
what
leadership.
I felt, yeah.
Thank you for that. Look, not that it matters, but I've got enclosed offices there, but we leave them for client meetings, for confidential client meetings. But I sit out with everyone. We are all a team, and we are on the same level. And I think everyone feels that at Propel, and Investor, and I think that's probably what sets us apart a little bit. But my theory is, whatever hiring or not hiring, we're always hiring for the right people. If the right person comes along, there's a spot in the business for them. And unfortunately, this day and age, it's harder and harder to find the right people, or people that have expectation or feel that they deserve handouts. You've got to come in here as a humble person. You may be very skilled, you may be very intelligent, you may be super at sales, like a lot of the team here all of our team are super talented, but none of them are obnoxious or arrogant or over the top. We are all one, and I think that's what is our strength here as a company, as a group.
I'll take it a little bit off topic here, and I really love what you're building with the culture. What would you say would be the three main contributing factors to how you actually are building that? Because I think it'd be really valuable for those who are trying to build a company and build the right culture for the right people, and build an employee, environment where employees want to come to work and want to be around them.
Look, I think be authentic. I don't try to be someone that I'm not. I know my strengths and my weaknesses. The team, I'm not great at typing emails. I can, but I'm not great on the laptop. I'm not great with that kind of stuff. But what I am good at is the interpersonal stuff and the connection with the team. But I don't pretend to be good at everything, because I'm not. And I've got wonderful people in here to help me with the things that I'm not good at. So be yourself, be authentic. Are they the two same things? Don't take yourself too seriously. And understand your strengths and weaknesses. A lot of CEOs, a lot of managing directors, it's I could sit here and go, I've done all this, boys, look at what I've done. No, I don't even hardly say I. Yeah. I might say that if I say I'm tipping that footy team this week. but for the rest of it, it's we. Yeah. We, it's Lauren, it's Q, it's Jack, it's Kyle, it's Jaden, it's Kaz, it's Harry, it's Lani, it's Ori. I might have forgotten someone, but it's our it's our entire team that matters, and we are the team, and we help our clients. It's never I. Archie, I forgot you, mate, but I spoke about you earlier, and Steph started today. No, Steph, I'll give you an example. We met her, she's a young lady, she's 21. She'd seen us in the coffee shop here at Isla Capri, and she's like, I just noticed you guys are such a family vibe. She goes, I always wanted to get into property. She just noticed me because I go in with Kaz and Q every morning. We get our coffee at Isla Capri via Roma. Every morning, hey, Steph, how are you? Coffee, brekkie, whatever. And she approached us. It's like, we're never really running ads, we're never chasing. And then she's like, I've always wanted to get into property, but I've seen how you guys care for each other. You're so family oriented. My boys are often running around the shops, and then she knows them, and then they're off, they're in here, they're 4 and 3, Oscar and Tommy. But isn't that amazing? I love it. Isn't that great? And she's a smart girl. I don't know how they do the TER now, but she got like 98 or something. Or what's it out of? 99.5. She's come to us for a job. And wow, she started today. She'll do 1 day a week, and then we'll work something out for the new year. But that's kind of how the whole office has been recruited, almost like off the street or through someone that we know, or that they've approached us. And I think we can keep going. We can keep rolling like that. Keep being ourselves. Keep wanting to help people and help others and put the client first. organically, as I say, the universe does reward that. And that's the same with any of your people listening about any business that they're creating, is if you don't think about your outcome, think about the client, think about the viewer, think about the, your avatar, think about how you can help them, and then naturally you'll have a good business out of that.
Speaking about the younger generation, as you said, the new girl you've just hired, 21, I find, a lot of people are struggling with today's age and buying investment properties or their first house.
Yep.
If you had to start all over again, what would you do and why?
Yeah, I mean, look, I bought my first property when I was 23. I was 23 when I bought it. It was back in 03. So I managed to get the loan. It was 200,000. It was a house and land for 200,000 in Abbey Waters in Bustleton. But then a couple of years later, it was worth 400, and I just had dollar signs in my eyes, and I sold it, and then obviously went on holidays and spent it. So for the first sort of 10 years of my career, I was in property. I was doing well, was helping clients, getting deals done, getting paid, but I basically spent all my money and made a lot of mistakes, which when I say you have to do you? Yeah, you probably have to. Maybe not to the extent I did, but then I learned from that, and this last 10 has been learning from my mistakes of the first 10 to be able to help my clients. So to answer your question, my time again, I probably wouldn't change too much because I had so much fun, and at what price can you put on that? And I've travelled a lot and been to a lot of countries, but I probably would have held a lot of my properties from the very first 10 years versus just like going, oh wow, I'm up 200, sell, spend. I've now learned, because the first 10 years I helped owner occupiers or first home buyers. The last 10 I've helped investors. So in that last 10 of me helping investors, naturally I've had more of an investor mindset, and now I've created the investment machine that is Propel and Investor. So would I change anything? I probably wouldn't overall, because it gives you that life experience, but I was probably just more about focusing on my holidays or my next, car purchase or something, and that's the advice I'd give to you guys. I'm not saying not to enjoy life, but I'm saying I could probably help you do it in a more measured way than I did it for the first 10, albeit I had a lot of fun.
Speaking to our audience specifically, what can the younger generation, people especially in their 20s that can purchase their first property, what can they do to buy their first property?
Yeah, well, I think they've got to prioritise that over the car purchase, over the holiday. But I'm not saying no to the car or the holiday or any of that. I'm saying get the investment or property, or it could be your owner occupier, and we can talk more about that if you want to. But ultimately, get the property purchase done first, because then you're in the market. And one of the oldest sayings in property, it's the time in the market, not timing the market, If we went back 10 years, we would have all bought as many properties as we could have. I know you boys are already
say that in crypto as well.
I was looking straight at
it's probably
but
true.
we got me into some cryptos, and that was the first thing you said. It's like time in the market is better than timing the market.
Yeah, time in the market. And as we know, all good property, I don't know about crypto, I won't talk about crypto because I've never bought it, but we know that good property is good over time. So it's the length of time holding it. And there's a really good graph, but I can describe it to you, that the property capital uplift gets better in the second 10 years than the first 10. Even though you might get a lot in the first 10, it really kicks into gear in that second 10. So it's that compounding effect. Ultimately, boys and girls listening, your property debt devalues over time, Say $1 million in the bank. It was a lot more 10 years ago than what it is now. But similarly, the debt. $1 million debt 10 years ago is a lot more than what $1 million debt is now, because the debt devalues with the currency. So over time, that debt devalues, the value of the asset goes up, and rental income slowly or steadily, should I say, increases, depending on the area, increases with that property over time. So ultimately, get into the property market when you can, and these holidays and cars and things are all doable. Cars need to be within reason, and I've made the mistake. I've had Porsches and all that kind of stuff. I've been there, done that. So, but once you've got the property or properties in the market, they actually do all the heavy lifting for the subsequent properties and any subsequent businesses. Like, I mean, I did a refinance with the bank the other day, and I pulled out $600,000 worth of equity for some projects I want to do. How could I do that? That's like $600,000 cash. But how did I do that? I didn't earn that necessarily net after tax dollars and save it in the bank, I had it from the last couple of years of property growth.
Yeah.
So that's the power of property that people need to understand. And I get it, a lot of you guys, and not pigeonholing you, but a lot of you into crypto and your own business, do the crypto, do your own business, but add property in as well. It's very powerful.
Yep.
And it will just keep going over time while you sleep. It doesn't need you to have your meetings, and I know you boys run you don't have to put time and energy into it. It does the heavy lifting for you while you sleep.
So I know some of our listeners will know that we've actually organised for you to come in and speak at the next Forge event on the November 29th.
I'm excited.
Talking about how people in their 20s can buy their first property.
Yeah.
What are some of the one or two most important points that people in their 20s need to do to invest in property?
Ultimately, your first one is your hardest, and it is. Because like I said, you invest right, the first one does the heavy lifting for the next one. So the deposit from the first comes... The deposit from the second comes from the first, deposit from the third, second. So it's coming up with that first deposit. Are we saving it? Are we borrowing a part of it? But ultimately getting that $70,000, $80,000, $90,000, $100,000 together is the hard part. But once you get that together and you can invest in the right property, we've just had an example earlier today. We did an assessment for our client. He came to us a year ago. He paid $600K for the property. The property's now worth $750. He put a 10% deposit in, $600, so he owes about $540, $750. So what's he got? $210,000 worth of equity because he put in to 10%. So $600, $540 is the loan, but then it's grown from $600 to $750. So now he's got 200 plus equity. So now that's the deposit for the next one.
Yeah.
Oh, I want to pull 30 out for a new business. No worries. There's 30 for that. So that's the power of it, and that's the advice I'd give to you guys. Scrape, save, scrounge, borrow, but get your first deposit together and get in, and then let it do the heavy lifting. Then you got your own businesses, do your other hustle, do your podcasts, do everything over here, but then have the property portfolio going. Because it will minimize the risk you're doing on other things, and it will always be something you can rely on moving forward as prices keep going up.
So for me personally, this is something, it may be a limiting belief that I'm unaware of. Obviously, getting to a 90K cash in the bank, it's very limited when it comes to high inflation, right? That's a lot of devalued money while it's just sitting in the bank.
True.
So at the moment, I'm putting that money towards stocks as it's building up, and then I can pull it out. So your money's still working, and you're less likely to be hit by inflation as big. So what are some potential saving tips that you would have for people to obviously you could borrow it, but to build that 90, 100,000?
Yeah, I mean, look, budgeting is very, very important, but I know what you're saying. You are still subject to, inflation and all of those things. Ultimately, look, if you were a first home buyer, which you would be, I'll just give you the Queensland example, like where we are here. I'll give you Jaden and Jack from our office as example, they're investment strategists. And I say 10% because that's what investors need to come up with, but they only had 35K. Because they're first home buyers. So we're getting them into a property where they don't pay stamp duty. They only need 5% deposit. Call it 700 grand. I think theirs was a touch less. They were 660 and 670. Say it's a $700,000 property. 5% is 35K. No stamp duty. And the $30,000 first home buyers grant. So that's a clever way for some first home buyers to get in. They will live in that property for 6 to 12 months, and then they'll turn it into an investment property, and they'll get the rental income and the tax benefits. So they're in for 35 grand, not 100.
So can you compound the first homeowner's bonus? Because isn't it 15,000?
It's 30,000
30,000
in Queensland. It varies state to state. It's 10,000 in New South Wales. It varies state to state. But I may as well give the Queensland example because that's where we are, and that might be relevant for you boys and girls listening and whoever. There's the relevant first home buyers grants in every state. I think Queensland's the most at 30K because I know that Jack and Jaden got it. And we helped them into an investment minded. We still thought, let's invest the best possible area we can, but they're going to go out of their way. Jack's from the north side. He's got one on the north side in Moreton Bay, and Jaden's got one out in Ipswich. But hey, a little bit of, inconvenience, driving a bit further to work for 6 or 8 or 10, 12 months. Jaden's going to have 200,000 equity, so is Jack. So now that 35K that they put in, they've turned it into 200. It's pretty powerful, isn't it?
I've heard a lot of controversy around the government grants purely for the fact of it's like, okay, do I buy a house to live in first and get the government grant there? Or do I, just put my money into an investment property? So what would your opinion be for someone to do
Yep.
looking to whether live in their first house
It's a
or
good
they
question.
invest in their first property?
The one answer we have to, well, the one question we have to answer is how much deposit have you got?
Yeah.
If you've got the 100K or 90K or 100, roughly 10% plus costs,
Yeah.
700,000, 70K plus stamp duty, bits and pieces, 30. That's a different story. We could just go investor straight from the start and you don't even use your grant. You could keep that up your sleeve. Did you know that? If you don't claim the grant and you haven't used it, it's still there for you later. But you might say, I don't mind driving half an hour, 45 extra to the Goldie. I'm prepared to do that for 6 or 12 months while I live in it. And then you could get in off 5% deposit with no stamp duty and...
Because you only have to live in it for 12 months, is that correct?
Yeah, look, it's got to be your intention. The government's not handing out free money for anything, but I think at least 12 months, it shows your intention. You go live in it. And yeah, it might be out of your way. Yeah, it might be a sacrifice, but hey, that's life, right?
The long game,
Nothing in life comes easy if it's worthwhile. And Jaden's your age. He's 22 and he's going to be $250,000 up by the time his house is finished. And that's in a year. 1 year, he's $250 up from his purchase price. And Jack's about the same. And they put in 35. So for those Queensland crew, it's a bit of a unique proposition with that 30K, because that 30K comes in, basically matches your 35. Suddenly there's 65 that don't have the stamp duty fees that you normally have as an investor. So yeah, that's another way to think of it. Every state's different though on the first home buy front.
Is Queensland the best market to buy in, you reckon?
It's one of, at the moment, a lot of our investors we're helping into southeast Queensland because we're number one for economic growth, we're number one for migration or population growth, and the price point versus a Sydney is still so cheap in relative terms, albeit that Brisbane has now gone to second on the median house price chart, second only to Sydney. Now, Brisbane, for many years, was the long-forgotten little cousin, right? Everyone talked about Sydney and Melbourne, didn't they? Even Canberra was ahead of Brisbane only until recently on the median house price chart. So with the Olympics coming in 8 years, I think now Brisbane's getting the recognition she deserves. She's got everything, apart from the beach. But if you want the beach, go to the Sunshine Coast or the Gold Coast. But everything else is there. And yeah, it's a strong market to invest in if you don't already have good coverage in that area. And we look at our clients' portfolios before we'd make a recommendation on that.
Yeah. So do you think Gold Coast would be an ideal place to buy investment property?
It depends on your situation, but there's definitely some good buys in the Gold Coast, albeit there's been some significant capital growth over the last few years. There's definitely opportunity here. It's tough though. There's not many houses sub 1 million houses.
Yeah.
There's apartments, there's townhouses. Would a house with some land content in a different area of southeast Queensland potentially be better for the client? We'd have to look at that on a case-by-case scenario. But yeah, as a general rule, we would prefer our clients buy land content because land is what goes up. The land appreciates, the building depreciates. So I'm not saying you're not going to get growth from some apartments and some townhouses. You are.
Yeah.
But it's more well-located apartments in little blocks of 6, 8, 12 or 15 near the beach, but you're going to have to spend a bit of money there, right? So generally we like land content to give our clients capital appreciation as a general rule.
Yeah.
What's the opinion on groups versus individuals? Let's say us 4 boys decided to go and invest in a property together, more income, bigger property we can purchase compared to an individual. What do you think is better?
It's a great point. We've just got a client literally from last week. He and his wife, given their situation, they could get a relatively low borrowing capacity. They've swung their very motivated and determined kids in, and one's on 75. I think the other kid was on 65, and they'd say the kids have 120k deposit between them. Mum and Dad have got some equity in their own home here on the Gold Coast. They've swung together as a family to increase their borrowing capacity from 550, which is relatively limiting, up to now $1 million. So exactly that.
Yeah.
So they're now going to get a more premium property in a more premium area. It's going to grow more, give more of a return for them, and they work that out as a family unit. And hey, arguably brings them together. And there's banks that will actually divide the ownership and make it so you're not joint and severally liable, if that makes sense. Normally you are joint and severally liable. So if you 4 bought and you went under, these 3 are going to pay off your debt.
Yeah.
But there's certain banks now that will split it up and make it like you are your own individual within that group. So the flexibility on lending is also important to note here. But yeah, great thinking. Think outside the square. And it's what we're doing for a client right now.
Well, I think it's a massive point. There's like, you look at the Muslim community and the ethnic community, they all come together, they live together. You look at them driving all the flash cars. You know, they've got 5 people living in the one house because they've all come together. Whereas us Australians, I feel we think selfishly and about ourselves rather than, you know, putting it all together and having the best resources.
I agree. And we probably think these McMansions, you know, these ideal things. I reckon half of the houses around the rooms don't even get used in half of the houses. So it's a great way of thinking. I think for your first property, thinking outside the square is really clever. But, you know, I mean this sincerely, the property market's just getting further and further out of reach.
Yeah.
Look at Sydney. Half or more of Sydney can't even afford Sydney. So it will be the same in Brisbane over time. We've got time, but it will happen. Melbourne will rebound. It's the biggest city by population, but it's just gone through a tough time with a few of the things through the virus era and a few premiers they've had and a few taxes they've got. That'll rebound. Perth, where I'm from, and Kaz, my wife's from, that's had a huge uplift the last few years. So ultimately, quality property is going to keep going up in value, because Australian property is one of the most blue chip and safest assets in the world. And anyone that says that it's not going to keep going up in value has rocks in their head. And get them to give me a call, and I look forward to sitting down for a coffee with them.
Do you recommend boys get together and go down that route?
It's in, what is the harm?
Yeah.
You could split it up 25, 25, 25, 25 and get into an asset. If that asset goes from 700K to 1.2 in 8 years' time and you've got 500K profit, how's that a bad thing?
Yeah.
And you write it up all up front. I always say this because I've seen it happen with friends and families and arguments. We don't have any arguments. We get our friendly solicitor who would act on your behalf in the transaction, and we go 25%, tenants in common, 25%, 25%. There's no argument.
Yeah. And
Worst case scenario, something happens. You have an agreement written up that we will agree to hold the property for 10 years. Now, if someone can't hold their share, the other 3 get the option to buy you out. You have all this written up front to make it, you know, because arguments can happen and things can change, but we try and mitigate that up front.
Yeah. And would they all have to use their first home owner's grant, or could one of them just use it?
You'd probably do that. You wouldn't get 4 lots of 30K. No, you might do that one as an investment one, and maybe not even use your 30K.
Yeah.
We'd have to have a closer look at it, but you would only get potentially one.
Correct me if I'm wrong, but the best bet, as Mui just said, rather than all 4 of us going and putting, you know, let's say you could put the first home buyer's guarantee, you'd all buy the first investment property, and then once you get the equity, then individually go get our own property.
30. Subject to it still being in then. But look, I've been in the game, as you know, over 20 years. I started my first 10 years helping first home buyers. There are always incentives to help first home buyers, because owning your own home is getting harder and harder. So governments, state governments might change, Labor, Liberal. We've just changed here in Queensland, didn't we, to LNP from Labor. They might make another grant or a bigger grant. There'll always be incentives to help first home buyers get in. So I think that's great. But ultimately, I always say, have your investor hat on, think like an investor, which is what we do with our young crew in our office and any young client that comes to us, any client that comes to us, but even someone young says, I want to just get my first home. We say, hey, John, this will be your first home, in inverted commas, mate, but we're going to get you into an area where we're thinking like an investor. Yeah. We're not just buying in any area to get you a roof and a 30K grant. We're going to go into an area where we're pinpointed for capital growth. We know the infrastructure projects happening in that area. We know the economic growth happening in that area. We know the demographics of that area. Who's living there? How old are they? What do they do for work? Are their incomes increasing? We know the population growth. So all of those things. So we always have an investor mindset. That's probably another good bit of advice for young first home buyers and young people wanting to get in the property market. Don't just buy any property anywhere. There's so many pitfalls. You've got to either get the help from a group or someone you trust, or do your own research, or whatever you want to do. But buying the wrong property will set you back years and years and years in time, and also in dollars, in cash.
From a non-biased point of view, let's say me as an individual, I want to get an investment property. Why would I want to come to Propel Property when you're
a
going
good
to take a
question.
commission where that could be money in my pocket?
It's a good question. You could jump on realestate.com right now or domain and make an inquiry, and the friendly real estate agent will ring you back tomorrow and say, thanks for your inquiry. Come and check out the house. Oh, isn't she lovely? I look at it, one little Laneota, and it's so lovely and it's all wonderful. And remember, they're trying to get the highest possible price for the vendor.
Yeah.
They're not on your side. Hey, don't get me wrong. You can still get a good buy like that. I'm not saying not to buy like that. I'm saying, do you do it all day, every day?
No.
Probably not. Do you know the right area to buy in? Maybe, maybe not. The research that we do, but probably ultimately the opportunities that we get through having been in the game for 20 years, most of the properties that we're finding for our clients aren't on realestate.com or domain. So our clients are getting properties that you guys can't even get.
Can't access, yeah.
Yeah, because of the fact that a lot of the properties, the owner doesn't want them on there, or it's a quick sale, or whatever, a multitude of reasons it might be. So that's probably our biggest point of difference, amongst other things, is that the properties that we can secure are not available to the general public.
So speaking of your experience, you've been running Propel Property for almost a decade now. What are some entrepreneurial tips or tricks that you'd give to the younger generation that they can go and create their own business?
Oh, look, number one's mindset. Mindset is hugely important. The story that you tell yourself is so, so important. And what story are you telling yourself? Is it a positive story or a negative story? From a very macro point of view, positivity breeds positivity. Yeah. And I am the same almost all the time. Like, I am so positive. I'm not saying I'm the be-all and end-all, but how do you go through the pitfalls of owning your own business for nearly a year, and the ups and the downs and the tax bills and the urgent notices and all of those things, and hiring and staff and all that? You have to maintain a positive outlook. You have to think that you're going to get through this and everything's going to be okay. And ultimately, it's funny, the world, life, the universe does equilibrate. You can't have happy without sad. You can't have up without down. You need to understand that things will go wrong, but also things will go right. And so mindset, I think, is the number one thing. But like with any business, you need sales too. Sales and cash flow is the lifeblood. So you need whatever business you've got, you need either the people or the systems or the marketing, or a combination to make sure that there's sales coming through. And then I suppose probably leadership within the business is really important too.
Yeah.
Those things.
Yeah, so the entrepreneur route, it gets a bit lonely.
Yeah.
You're talking about positive. What was your dark times like, and what made you change and be like, I want to get out of this dark times?
Yeah, I mean, look, the thing with having your own business and not having a money partner or someone I could just ring and go, oh, can I have a couple of $100,000 to sort these things out, is like, there is no option. You have to find a way somehow. And I think in a funny kind of way, that is like self-fulfilling. That gave me, that's why I went to that extra appointment, because with the business we started in Sydney, like, I'd do appointments at 6 p.m. and 8 p.m. at night, and I'd do that sort of 5 nights a week. Go to that extra appointment, go the extra yard. Sometimes I'd drive from Rose Bay, where we live, to Penrith, and there'd be nobody home for 8 p.m. I remember driving out there and getting a souvlaki down at Penrith. I'm like, am I the only bloke that's driven from Rose Bay to Penrith for dinner, for a souvlaki? I reckon I am. But driving from Sydney to Newcastle and no one's home, and oh my God, like, you're right, but you have to keep going. The bills are there. The bills don't stop. The overheads don't stop. It's got to be that mindset of like, I'm going to make this work. Everything's going to be okay. You might have the world coming in. You might have all these bills you don't know what you're going to do with, but you've got to go into your appointment and take a deep breath and sit down and water off a duck's back. My dad always told me, you can be like a duck paddling really, really hard underwater, but what does a duck look like on top of the water? Just cruise. Because when you're owning your own business, you're going to have tough times. So I just go back to that mindset. I did a bit of meditation over the years. I've got to do more of it, but I think my ADHD doesn't allow me to do it. But I'm very thankful every day. I don't necessarily practice right now, but I grew up in the church as a Catholic, and my dad would always say, thank you, God, for another lovely day. Thank you, God, for all our blessings. I say thank you to the universe. I probably changed God to universe, but I say thank you, universe, every day. Thank you, universe, for my family. Thank you for my wife and my kids. Thank you for my business. Thank you for my wonderful team. Because the more that you are thankful for, the more the universe will give you to be thankful for. If you have an abundance mindset and you are thankful versus, and you live in a state of gratitude versus living in a state of fear and, oh no, you can't have that, that's mine, and you owe me $13 from the other day, mate, and it won't even up, or I don't know, everyone's got to watch their pennies, but there's got to be some reason to it. You know those people, what about that $1.20 or that $20? No, think abundantly, think that things will work out, and that's the way I think. I know I'm probably my only skill set's probably sales. I know that I can go and make more sales. I know that I could sort most of those things out in a way that I don't think of the ones and twos, which probably to my detriment. But I think overall that's to my advantage with the wonderful team that we've got, and they know that they're generous, I'm generous, we're all generous, and ultimately that abundance mindset that things will work out gets you going, and it's proved that we're still here after nearly 9 years.
Yeah, and it seems like your father sort of played a good role in your life, and a good role model, especially in getting you into the property investment space and potentially even creating that mindset. I'd love to know, who was Michael when you were a young man, and what were some of the lessons that you've learned along your journey?
Yeah. Well, he was not a bad role model. I mean, mum and dad split up when I was 2.5, and my elder 3 siblings went with my mum, and I went with my dad, and he was a one-man band real estate agent, and I'd go to every appointment with him. I was 3 or 4 or 5, and he'd have the old carbon paper out with the old offer and acceptance contracts, like they used to do back in WA, because you'd have to do the copy, then give the buyer the copy at the time. But I remember just going to all appointments with him, and he was like, I've got the ankle biter with me, because he couldn't afford to put me in to babysitter or whatever. So, but I think that was a big part of my grounding and learning. I didn't even know I was learning, but I was already learning to negotiate before I was like 5 or 6, because I was just going to every appointment. So growing up, going with dad and watching him run his own little business, because he was mainly a one-man band. He had a few employees here and there. Watching him negotiate and do deals. And he lived under pressure as well. Like, my parents split up. We had the biggest house in Cottesloe. That got sold. Then they both rented and they struggled. I was like, oh, wow, I've got to learn from this. I can't have this happen. And there's some learnings there for me too. But yeah, watching the struggle, I think the growth in life comes from seeing struggle. And I was like, I just don't want to have that repeat for me. So I've taken the good things from what I learned from dad, which was the people skills and negotiation, wanting to help people, and that teamwork and leadership. He definitely had his flaws as well, but I've tried to bring everything together, and I've still got my flaws, don't get me wrong. I've tried to bring that together now for what I do in our business and at home, and it's working to an extent. But your childhood just shapes so much of your life, doesn't it? Yeah. So much. I still think back to it. I'm 45. Remember when I was 5 and 6 and 7,
That's so interesting, because it's so similar to, I'm sure you're aware, Robert Kiyosaki, the Rich Dad Poor Dad story, right?
Yeah.
They're sitting in on every business meeting and everything, and all of a sudden he's learning the ins and outs of business from
yes, that's right.
how to make money.
Yeah, it's true. Well, he's a big one, isn't he, for property and leverage. Huge. Leverage is a whole nother realm. That's probably the reason I love property so much, boys, is the leverage aspect. You talk about crypto and shares or whatever, but you've ultimately got to have the cash for that, right? Yeah. You've got to have the 50 or 100K to put in. The big advantage with property is we can leverage 90%, ultimately, roughly, the value of the property. 90% of that's coming from the bank. Yeah. Beautiful. So you're now in from a 50 or 100K deposit, as discussed, first time buyer investor, but for 50 or 100K, you've now got a $7 or $750,000 asset in the market, where the bank's putting most of that money. But who's getting all the growth who's getting the compounding effects of the capital growth? You are. So that's a big one for the younger audience to understand about property, is the leverage component. I've got about $5 or $6 million in the property market, but I didn't pay cash for that, did I? I leveraged most of that from the bank and let that grow in value over time. Ultimately, that doubles in 10 years. That 5 goes to 10, and 10 to 15, and 10 to 20. So I digress there, but leverage is a big thing when thinking about property, and also understanding that the bank's not silly. They're not going to lend you the money of an asset that's not going to be any good. They send a valuer out to make sure that it's worth what you're paying for it. So there's a multitude of checks and balances in play as well for people that, rightly so, may well be scared of property investing. It's actually not as scary when you think about who's involved and what's involved. You can't go and overpay stupidly, really, for a property when you're borrowing most of the money from the bank, because the bank's going to check the value independently first. So Anyway,
would you go to a bank to get a loan, or what would you do?
I'd use a broker. You've met one of our gun brokers in the office. We've got some people that we refer our clients to who've got up to 70 different lenders in the market. I wouldn't go to one bank. I'd go to a broker, because banks say no to me all the time, but I just go through a broker. I go to the next bank and they say yes, and I get the property. That's just life, right? Bit like going up to the girl at the bar. The first 4 might say no, and the 5th one says yes. You beauty, we're on. You don't need one, don't you? But you only need one to say yes. You only need one bank to say yes to get that property. Think of how many people would have gone to a bank and the bank says no, and they go, oh, okay, I'm done. How much difference that makes to them, their life, their whole portfolio. Could actually mean the difference between them financial freedom and not. Whereas if you go to the right broker, I say with brokers, you tell them everything. Remember, the bank, you only got to fit the bank's policies and compliance. You don't, within law, you do it properly, but you don't have to tell the bank necessarily everything.
Yeah.
You tell the broker everything. The broker packages it up for the bank to get it approved, if that makes sense. Yeah. That's a big one too.
Yeah.
Use a good broker, finance broker, mortgage brokers, who I'm talking about here, over going direct to a bank. Because the bank, Commonwealth Bank, ANZ Bank, as much as we love them, I'll be honest, they don't love us. They love new customers more than they love old customers who've been with them for 20 years. Yeah. That's another story. They've only got their suite of products. They've only got what they've got. When you go to a good broker, they punch your details into their computer, goes to 70 different lenders. It's basically like yes, yes, no, 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 yes, 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 with the interest rate, the payments. It's epic. So use a good broker over going to the bank direct, for sure.
So you mentioned you bought your first property when you were 23.
I was.
And now you've got a multi-7-figure investment portfolio. What were you doing in your early 20s to allow you to build up that portfolio?
Well, as I said, in my 20s, I spent it all and made bad decisions. But I built it up probably from about 31, 32 to what I am now, 45. Don't really regret what I did there, because of experiences, and I had fun and lived life and had cars and all that stuff and holidays. But looking back now, I could have been a bit sharper and wiser with my money. But hey, everything is on the way, not in the way, right? That's one of my favourite sayings. Everything is on the way, not in the way. And so who I am today is because of what I did and went through back then. But what could you do now? You could just start with your first property. As I said, do your crypto, do your own business over here. Let that property grow in value. Get it revalued in 2-3 years. Use the equity from that property. Equity, I'm not even saying you have to save that much more money, because you put your savings into the property right up front, then let the equity grow, let the value grow, then refinance the equity there with the banks to the next one.
How much does
and then do the
need?
same again, rinse and repeat. I've got this amazing thing called a capital growth matrix, which hopefully I can show. Are we going to have a screen on that night?
Yeah.
When we chat on the 29th of November. It's epic. I'm going to show a capital growth matrix with the power of buying, say, 4 properties over a 10-year period at conservative growth rates, and how much, like, it's almost a $2 million uplift you get passively, because the rental income and the tax benefits pay for the properties, if you understand what I'm saying. You're not even paying that much to hold these properties, because the rental income and the tax benefits pays for it. So what was I saying? Get the first one, and then we just grow slowly and steadily, safely and securely, blue chip properties, where we can land content. If we can't, a well-placed apartment or townhouse is totally fine. But generally, if you can afford land content, like I've said, that's more premium. It will go up a little bit quicker. But any property is better than none, but it's got to be the right one.
So what are some of the hot land content at the moment in Gold Coast?
Oh, look, Gold Coast. I mean, look at Wurrungeree. Look at Skyridge out the back there. The prices have gone bang there, and they've you know, that's been a great project by Sala Property Group. Brinton Keith, I know him well. He's got the land out there. He's a great guy, and he's the display villages out there. Look at that. That's Gold Coast land, but you're in for $1-2 million out there. So. Where are some of the areas? There's plenty of areas through southeast Queensland. There's spots in between Gold Coast, up through Ipswich, back up into like the Brisbane City Council, South Brisbane. Then on the north side, North Brisbane, up through Moreton Bay, up to the Sunshine Coast. I know that doesn't narrow it down, but there's some epic little pockets throughout there where we're securing properties for our clients all the time, from $600,000 to $1.5 million. So there's a range there. And for those for like our boys, Jack and Jaden, they really wanted an investment property, but they're going to live in it for a year. because they got in off 35 grand deposit.
Yeah,
Now, if they're sitting out of the market, adding that 35 and saving their after-tax dollars, the value of the property they bought for 660, and that was, they both settled on my birthday, 3rd of April, and that's like this year. So their value of their properties has gone up like 100, 150 grand in that time. So their saving, their saving couldn't keep up with the rate of capital growth. Do you understand what I'm saying?
Yeah.
So that's why where you can, get in as soon as you can is probably the best advice I can give you.
You can justify the fuel for $150,000 growth, right?
Correct.
Yeah.
You definitely can. And you make it work, and they've got some mates that are going to come live with them
Yeah.
for a bit of rental money. Yeah.
So
Yeah, that's it. I mean, their repayments, I think, about $900 a week, but they can afford it because the bank's giving them the loan. You rent a room out for $350, suddenly that lightens the load a bit there, doesn't it?
yeah, so there's obviously lots of massive connections between entrepreneurship and investing in property. You said mindset's massive, right?
There is. Oh,
You
yeah.
said it comes down to being able to do what's willing, take the sacrifices, being able to do all sorts of stuff. So what would you say are some of the biggest connections that you find between the two?
It's really interesting. You're right. They're the two things I've specialised in, but I didn't really put the parallels together. But now that you mention it, there definitely is, Isaac. Like, I remember 7 or 8 years ago, I had to ring the bank and put a 3-month hold on my repayments. But not many people would think of that. But that allowed me not to have to sell the properties and knee-jerk reaction, which have now doubled in value since then. I was going through a tough time. I rang the bank. They held the repayments for me for 3 months. I regrouped. I was good again. So that's that. Hey, number one thing when things are going badly or you think they're going south, deep breaths and just don't make any rash decisions. Keep calm. Be like the duck. Just keep calm under pressure. Okay, cool. I'm in a cash flow issue now with the business, which is like any new business. It's about 3 years in. Had my mortgages. I had to ring the bank. It's about 6-7 years ago. I said, just put the mortgages on hold, please. I'm going through a tough time with the business. No problem, Mr. Pell. We'll hold them for you. Wow. Deep breath. I don't have to sell the properties. There's no forced sale, no discounting my properties, no selling my properties. Yeah. Property investment's a long-term game, right? Regrouped, didn't worry about the properties, regrouped the business, fired up the sales, got the cash coming in, we're good again. So it's about, and maybe I'm being real here, that a lot of people might have just gone, oh my God, sell the property, oh my God, sell it, get rid of it. Yeah. No, that property's now doubled. That property's now significantly gone up in value, and just because, again, not panicking, thinking outside the square, there's often always a solution to your problem, whether that's in business or in property. But yeah, the long-term game and that entrepreneur mindset set is really important.
I want to dive a little deeper into that because I've never heard of this before, being able to just put your property completely on hold. What are some of the implications of that and what it could actually do? Because I've never heard this before.
So people think of the worst case scenarios with property, or what if I can't make the repayments, or what happens if I lose my job? Well, first up, with all of our clients at Propel, we always have a 20 to 30K buffer where we can. Yep. So say you guys did your first home, you put the 35 in, that extra 30, we'd put some of that aside for a rainy day, right? So, but we never want to make a knee-jerk reaction. Buying property is a long-term game. So as a worst case, I'd used all my buffer on the business. So as a worst case, I had to ring the bank and explain that. But you can ring them and they're very understanding. It's not ideal. It's not where we want to go, but life isn't ideal. People don't get married to get divorced. Unfortunately, people pass away unexpectedly. People lose jobs, they get injured. Life is life. So understanding what to do in certain situations is hugely important. And I'll be honest, that's what I did. That was 2015 when I just started, 16, sorry. I just started the business and it was a tough time with cash flow and getting the new business going. But I didn't want to sell the properties because I knew the properties were a big part of my future wealth. And so, hey, probably comes down to that word, negotiation. Negotiation, I learned very early, everything in life is negotiable. Everything in life is negotiable. You ring the bank, you explain to them your situation, they're going to work with you. Things change, cash flows change, interest rates go up and down. But I never lost track of that positive mindset that I'll dig my way out of this. And thankfully we have.
That's awesome.
But it's an ongoing thing. I never rest on my laurels. I'm up at 2 a.m, 3 a.m. a lot of mornings, boys. Excuse me. My wife laughs at me. I go out and sleep on the couch because I'm rolling around thinking about the business and thinking about things. But that is just what the game is. That's the game of being an entrepreneur and having a sizable property portfolio as well. I think I've got the double entendre. It's but you get used to one, you get used to the other. It's just like swimming in the deep rough seas, you just become a pretty good swimmer after a while.
How much does someone need to invest in their first property? Like, the market fluctuates, so obviously, different properties for different people. But what's a rough estimate for someone that's in their 20s? How much should they have in savings?
5 to 10%.
5 to 10%.
Work off 5 to 10%.
And is that on a $500,000 house? What are we looking at?
Yeah, look, if it's an investment property, you're not going to live in it. You've got to work off a 10% deposit plus costs.
Yeah.
So say 50K for the 500K one plus 20K stamp duty settlement fee, so 70.
Yeah.
But if you're going to live in it and get the grant, as we talked about, that's a different kettle of fish. And that's a clever way. That's a clever way for young people when the Queensland government, like they are, throwing a $30,000 grant out there with basically no stamp duty. Effectively, it's prorated on the price of the property, but it's more or less nothing. So no stamp duty fees, which are normally like $8,000, $9,000, $10,000, $11,000, $12,000, plus you're getting 30. You're effectively getting a 40 to 50K gift. For the Queenslanders, pretty hard to look past that. But yeah, ultimately you got to look at somewhere between 50 to 100K deposit.
Is stamp duty, is that including potential lender's mortgage insurance? Because
that's
obviously
separate.
There's lots of misconceptions and there's lots of miscommunication around that, I believe, around lender's mortgage insurance. So can you give us a little bit of a breakdown on what that actually is?
Basically, if you've got less than 20% deposit, the bank makes you take out lender's mortgage insurance to protect itself, if you get what I'm saying. So a lender's mortgage insurer is involved in the process. They insure the value of the property. If you can't make the repayments, then the bank's covered. But it's you've got to pay for that, if that makes sense. It's
So
crazy.
is that just taken
But that
out?
gets capitalised on the loan often with the financing. So like I said, with our Jack and Jaden story from Propel, call it 700K, it was just under that. They still just put the 35K deposit in, Lender's mortgage insurance is in there, but it gets added to the loan, capitalised to the loan. So it's not a real out-of-pocket expense. It's not that big of an issue. And when the property goes from 660 to 800 plus, like theirs is doing, it's not an issue at all. And we say to even our investors, with an investor, at 10% deposit plus costs, you're less than 20%, aren't you? There's lender's mortgage insurance involved. But we say it's the cost of doing business, it's tax deductible, and it allows our investors to keep buying more properties. So if I've got a big deposit, I'm not going to put 20 or 30% into one investment property. I'm going to put 10% in, 10% in, 10% into multiple, because it's the power of having multiple properties in the market that gives you that growth, if that makes sense. The compounding effect, say, of $1 million in the market, call it easy numbers at 7% a year, that's going up 70 grand a year, versus if I just had 500K in the market at 7%, that's going up at 35K a year. Yeah. Doesn't matter the size of the deposit on either one, does it? Still the asset's 500. So if I've got a big deposit and I can service more, I'm better off buying more multiple properties.
So what about
smaller deposits?
What about trust? Now I know there's
Trusts.
land tax with that. Is that something you want to look at to protect your properties?
Some people do that as they're getting a more sophisticated portfolio set up. That's more with the advice of their accountant and solicitor.
Okay.
We don't really mind the entity name. Ultimately, our job and our goal is to find the right property for our clients. We help clients with self-managed super funds, with trusts. Whatever the entity name is important, but ultimately the strategy we've worked on with the client's the most important thing. So what are we going for here? Is it your first property in your portfolio? Is it your third? Are we looking for capital growth? What's the play? The entity name, a little bit kind of here or there. I'm not saying it's not important, but it's something the client will work out with their solicitor and their accountant.
Cool. So what are your future plans with Propel Property? You personally, what do you got in store?
Yeah, so Propel Property, I think we just got to keep it like we're going, which is, boutique. It's individualised for the client. We set up a WhatsApp group for all of our clients. We've got a wonderful team. We've got a wonderful set of clients as well, and who come back and buy more. I don't think we want to get too big. I think we want to stay at around 15 to 20 team members. I don't call them staff. They're not staff. We're a team. We're team members, and I think we want to stay around 15 to 20 and just continue to help more people get into property, because unfortunately there's so many of these bloody cowboys in the industry doing the wrong thing. Our modus operandi, our mission is just to help people invest in the right property, because you're making such a difference to their future. You're literally helping them set themselves up for life or not. So that's our mission. We're going to keep doing what we're doing. I think we've got a wonderful team here, and it translates into wonderful clients who we love so much. And I tell our clients we love them. I tell our team that we love them, and I do love them. So, Love is the currency. Energy is one thing I haven't spoken about, boys, before we finish, if you are going to wrap it up soon. Energy is the currency in sales. Energy is the currency in everything. Energy is the currency in life. People want to be around people who have energy, whether it's a girl you like or a boy you like. Why do you want to hang out? Energy is often the currency there. And definitely with the sales process, whether in person or via Teams, you have to have energy. And it's a transfer of energy to that other person that actually gives them the energy and the motivation to want to actually purchase what you've got. But ultimately, people don't like to be sold. People love to buy. Don't sell something to someone, understand their needs and their void, and then they will want to buy. And that motivation, that difference there, that difference in mindset, so important, I think, in the sales process.
I'm glad you brought up your mission as well. What is your personal mission?
My personal mission?
Michael's mission.
Well, Michael's mission is to continue to run Propel and to continue to help as many people into investment properties as we can. My personal mission is to continue to look after my family and to obviously develop our, we've got 3,000 square metres of land on the Isle of Capri. And so that's a little personal project that we've got going there. But yeah, we love what we do. I love coming to work. Love living life. And I feel like I've just started.
Love it.
Even though I'm 45.
And who do you want to see on the podcast next?
On the podcast next, on your podcast next. I mean, you could get our finance man Shawnee on, or you could get our head of acquisitions Q on, do I need to think someone else not within the business?
Anyone. That's perfect. Yeah.
Sean McMahon, ex-Wallabies player, he'll come on for a chat.
Oh, yeah. Perfect.
But yeah, awesome, beautiful women, lovely women on.
Yep.
To be able to chat like the investor girls, Loz and Kaz.
Yeah.
Celebrities are great, but I actually prefer the real stories of real people, don't you?
Mm. Oh, yeah.
Well, you think about it, there's people out there that aren't even noticed that have probably got bigger portfolios and bigger names if they were in the limelight than the celebrities really do. They've got a PR team behind them, right?
That's right. Yeah. A lot of it's smoke and mirrors.
Exactly.
And you can't believe what you see on Instagram.
No.
The Propel Property one you can. We're pretty authentic on that one.
Yeah, perfect. Well, where can people find you?
At Propel Property. That's pretty simple.
Everywhere.
Propel Property, Investor Property. My wife runs that with Lauren, and they encourage and empower women to invest. You don't need the boys. It's a male-dominated arena. You don't necessarily need them. Need the lads to help you, or the gents and people that are coming out of relationships or getting divorced. The girls at Investor empower women to invest. But ultimately, it's the same wonderful strategies and properties that we put together for our clients that are individualised to their specific set of circumstances. So
that's an awesome market. That's really niche as well. Love to see it.
Good stuff. You should get them on the podcast next. Thanks for that, boys.
Perfect. Thank you, Michael.
Thank you.
Cheers, lads.
All right. Ladies and gentlemen, Michael Pell.
Thanks, boys.